Hello, welcome back. My name's Justin Urquhart Stewart. If you haven't been here before, you're very welcome. Just my take on what's happening on the markets. Here we are after Labor Day and the rest of the summer holidays. Now back to some realism. And of course, now we've got to deal with the autumn, and you've got to deal obviously with your election coming up, which is going to be exciting, whichever way you're going to vote. And it's not just going to affect America, it's going to affect us all. Now, I'm not going to necessarily talk about equities this week because there's an awful lot going on with volatility. And as before, make sure you've got enough cash to make sure you use that cash to benefit from that volatility. If you, that is, think that the world of capitalism is still going to carry on, which I still think it will do. So doom-mongers can go away, but it is going to be difficult. So equities, though, leave on one side. Bonds are still going to be incredibly difficult to try and manage at the moment, with an awful lot of their yields actually being negative. So maybe it's going to be some of the high yielders, but with that goes the risk. We've already talked about gold as well, and some of those other assets, and certainly property is going to be going through an interesting time, depending on where you are around the world. Certainly United Kingdom, not a very attractive place to have property at the moment. But one thing that is happening, and you can see this theme happening all over the place, and that is with regard to further investment in corporations, breaking up of corporations, sometimes by their own volition because they need the cash, or more often because you're going to get some aggressive capitalism going on, whereby you're going to get private equity money, and by the way, there's no shortage of it, going in to go and actually break up large corporations and to be able to get those assets revalued, either to sell them off or to actually say that actually you can actually take the parts and actually get better value that way. That's going to happen not just domestically in the United States, but also internationally as well. But it's something that we should all use. Now, there are several ways of playing this. One, you can invest in the private equity firms themselves if they are listed, and some of them are, so you can try and use those. Two, you can try and identify some of those targets, because actually by them going after them should have some impact on the share price. And then also potentially actually trying to find some of those smaller businesses which are in the process of being spun off. So there are lots of different elements there you can find. Who are these companies? Well, they're the old behemoths that are going to get broken up. We've seen it happen before. We've seen it happen before with some of the banks. We've seen it happen before with the oil companies and certainly with the telecoms companies. And there's going to be more of that happening. Now, I think you're especially going to see this occurring in the retail sector and consumer sector. Why? Because we're still going to be spending. But look what's changed. An awful lot has changed in the way we go about it. And the online issue isn't just a tech issue. It's a change in sentiment, a change in style, and not just down to my quite obvious laziness in not wanting to go shopping very far. But what it means, therefore, though, is the old behemoths, be it the old likes of PC Penny and things like the others, or more domestic ones we've got in the United Kingdom, will get broken up and find themselves actually either as smaller businesses or just actually ending up with a cask which actually needs to be then rebuilt in some way. This will provide, I think, an opportunity for some careful research to be done. But don't worry, you don't have to do all that yourselves. Just look at actually what some of those private equity firms are doing, follow some of the news flow in terms of seeing what they're targeting, because it will come out. Because what they'll be searching for is making sure that other shareholders there as well will give them enough support to be able to go in and break those up. We've seen that, for example, back in the United Kingdom with a large bank like Barclays, where an American investor is going in there, trying to dramatically try and break up the investment bank from the commercial bank. Now, a lot of that's already happened in the United States, but watch out, there'll be further moves in the banking system as well. That's inevitable to happen, because remember, a lot of the banks at the moment, traditional commercial banks, aren't making money. Why? Because rates are too low. They need the spread. So have a look for some of these wounded beasts, and have a look at some of the beasts which are going to be doing the wounding. And you'll provide, I think, there's some real value for yourselves. Every year that some are coming up. So look for the slow old behemoths. They've got real assets in them now. They're not behaving very well. And they're often known as value stocks, which you're going to pick up and recover. And they're not. What they actually like to do is lie down and get killed. And you'll find your recovery from actually when you find the choice steaks and bones are on those ones, which you can chew for yourself. That's actually a rather unpleasant simile. I apologize. But nonetheless, where there's meat, there's value. And where there's value, there's going to be some profit. Good luck. And I hope you had a good holiday. Keep safe.